Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about logistics. We're talking about industrial real estate. We're talking about warehouses, and now we're going to talk about investment property sales. Please welcome my guests, Larry Callahan and Peter Anderson. They're both with Pattillo Industrial Real Estate, and you guys have been active in the market. You've been buyers, you've been sellers. If you're looking to acquire investment properties in the industrial world today, what's it like out there? Is there enough opportunities for acquisition?
The short answer is highly competitive. It is a highly competitive situation. The people that do this every day are telling us that there are $3 or $4 of investment money available for every dollar of investment property that's actually on the market, especially the highest quality markets with credit tenants in it. So it's a very competitive market. It's been a lot of different ways you can look at the real estate market. You know, what's going on with vacancy and what's absorption, and you know, what's the construction cost looking like, and what are rental rates. I mean, but clearly the hottest part of the market has been investment sales for the last several years. There's been a lot of money looking for a place to go, especially in a, you know, if you look at where people can put money. They put it into the stock market last year and went through all the roller coaster rides, and at the end of the year they got nowhere. They were right where they were at the start. So an investment that pays you a cash return that is, say, 6% on what you just invested looks pretty good, especially when you consider that that property might increase in value over time.
Is that a cap rate that you've seen lately? Tell us
Yes.
about some sample cap rates that you've bought or sold at.
Well, we're seeing quality industrial property hovering around a 6% cap rate, and it varies. And we've seen some that, you know, been trying to push below that. We've seen some that go above it. Depends on exactly what the quality of the property is. But we have sold a traditional older portfolio of industrial properties that we owned, and we have been moving into taller, younger properties that have credit tenants in it. So we have seen the cap rates approaching the 6% range, and they're significantly higher, you know, more like 7 or 7.5 when you're dealing with older properties.
Well, it sounds like a smart move in real estate. My friend did it with women. It didn't work out for him when he went for taller, younger women.
Yeah.
But a good real estate move.
Yeah.
So there's been talk of bubble pricing in some of these property types, and certainly industrial is hot. The outlook's good. The cost of money is low. Is it time to sell? Are you more of a seller today than you thought you would be?
Well, some of the properties that we sold recently, we've held on to for 50 plus years. So yes, we thought this was a very good market to do this in, and we don't know how long the market carries on. We do feel like it was a good time for us to sell, particularly because we were using that as a strategy to expand into other markets and move into the more modern product type. So we felt like it was a very good time to do that. You know, maybe Peter wants to comment on some of the things he's seen, because he's been out negotiating forward purchases of things.
Certainly, if you look at the landscape out there, it seems that owners are choosing to sell, that this is the time to sell, and that people are bringing their portfolios to market. And now the market has stayed hot for a long enough period where we're seeing industrial properties come back up after that 3-year period. So a little bit like we've seen in the apartment sector for a number of years now, we're seeing the same investment product come back around a second time 3 years later and trade again at yet a more aggressive price. I think the pricing is getting to a historic high when you start to value things versus replacement cost, when you start to value things versus cost per square foot, and with these very aggressive cap rates. And some of the aggressive cap rates could be justified early in the cycle because rental rates were low. That rental rates were at a historic lows, or low relative to a property's value, because the rental rate might have been set in the downturn of the market in 2008, 2009, 2010. Now these rental rates are being readjusted upward because there's more pressure when tenants are looking to renew their leases. So with the tighter vacancies in the market, the tenants are paying higher rental rates. And so if you apply the cap rate to these higher rental rates, it starts to make that valuation versus replacement versus your pound per square foot much higher than we saw in the first months of the cycle. So it'll be interesting to see how this turns out.
Where are there some opportunities for investors of different sizes in the current market?
There are very few hidden opportunities. It is, as Larry said, there is 3 to 4 buyers for every decent and 10 to 20 buyers for every quality investment opportunity out there. So I think you need to check yourself if you think you're finding an opportunity buy.
Pinch yourself.
Pinch yourself.
Pinch yourself. Make sure you're awake. So what are you doing if you're doing an analysis to acquire a property today? Are you looking at exit cap rates at all, and are you considering that as your how that property might be valued 5 or 6 years from now, cap rate wise?
I'll comment on that. Everybody who tries to figure out what you should pay for something, there's a cash flow analysis, and it starts with what's this going to cost, and what do you think you're going to get from rental rates, and how long will it be vacant, and what will it cost to re-tenant. There's all kinds of assumptions that go into it. But one of the ones that just affects tremendously what you're willing to pay is what you think it would be worth 10 years from now. And everybody's guessing at that. Nobody knows for sure what that number is going to be. But it's important, and we think that rates, I think right now, are probably lower than they will be 5 or 10 years from now.
Yeah, well, good point. We're going to take a short break. When we get back, we're going to have some tips for tenants, for occupiers of space. So stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.